Hey, hello everyone. Thanks for joining today's session. Happy Sunday and hope everyone is doing well wherever you are watching this. My name is Andre and today joining me is my friend Stephanus. As you probably know, so today the objective is to show you guys how the case interview looks like, and we will simulate the real situation that could happen in a case interview. So Stephanus will play the role of interviewer and I'll be the interviewee. So hopefully this gives you a sense and can help particularly if you are preparing for case interview, applying to consulting, or just simply curious about what we do as consultant. And today's session is organized by Ada Mentor, which is a platform to help exactly what we described, to help candidates prepare and secure their dream job. So for example, if you're interested in consulting, then you can get to know better about the industry, preparing your application, and also preparing for the interviews through the session with the mentors. Because we also believe that there's no better way to learn from than learning from someone who has been in your shoes. So if that's you, so feel free to just sign up in adamentor.com and we take it from there. So maybe just in the interest of time, let's just get started with the case. Steph, you're ready?
Yeah, well, are you ready?
Yes, I am ready.
All
cool.
right.
Okay, let's go ahead.
Yeah, sure. Good morning. Thank you for being here today. My name is Stephanus, your interviewer. So I think let's start. Our client called Yummy Pizza. Yummy Pizza is a fast food chain that competes head-to-head with Pizza Hut, Domino's, McDonald's, Wendy's, and Burger King. So it's a fast food chain that is mostly in the US, but actually even in the worldwide, they are still the fourth largest if we measure it by the number of stores in operation. Even though Yummy Pizza owns some of its stores, but it operates under the franchising business model. So about 70% of its stores owned by the franchisees, which is the individuals who own and manage the stores, pay franchise fee. But for example, with almost like all other franchise business model, major business decisions like the menu, the look and feel, the operation, on how people do things and how people cook is still controlled by Yummy Pizza. Of course, Yummy Pizza wants to grow its company. They are thinking of acquiring another company called Pasta House. Pasta House is a growing pasta also franchise in the US, but they are not international as of now. So Pasta House also, as I mentioned earlier, they also operate under a franchising business model, but there are a bit of difference in there. Yummy Pizza, their franchise business model is more on regional. So for example, is one province or one state in the US is owned by one franchisee. Then Pasta House is more of one store in one particular location. For example, if it's in an airport or in just in one of the department stores or mall that is owned by the franchisee. So it's not by regional, but by store. So for Yummy Pizza, basically the franchisee is required to open a certain number of stores in that particular region. The CEO talked to us last week and then they said, hey, I want to acquire this pasta house. Do you think it's a good idea?
Got it. Is that it?
Yeah.
Cool. So maybe before I get started, just to recap quickly on the information you shared, just to make sure I don't miss anything, right? So our client is called Yummy Pizza. It's currently number 4 largest pizza chain in the world. It's competing with the likes of Pizza Hut and the like. It's number 4 in the world, located mainly in the US, and it's actually having a franchising model where 70%, I think you mentioned, right, are owned by Yummy Pizza, and it's still, in terms of major decisions like the menu and the store look and feel, is still controlled by Yummy Pizza as well. And it's actually considering an acquisition opportunity. And in this case, the target is Pasta House. is also a chain based in the US. But in terms of their franchising model is slightly different, where it's focused more towards a certain area where you open one franchisee could open multiple locations within a certain area. Is that right?
Yeah.
Cool. And then maybe just to clarify, I think all these are good information. Just to clarify, if there's any a specific objective that I should be aware of about this potential acquisition, whether, for example, Yummy Pizza is targeting certain financial targets or anything. Is there anything like that?
Nothing specific, but the CEO mentioned that they want to double the market share of Pasta House
Okay.
if they are going to acquire it, and they want to expand the number of stores as well by 2.5 times. But with these two objectives, one thing that the CEO afraid is whether the new sales per store will be too high. So I think we can take a look in that at some point in the analysis as well.
Got it. Cool. Okay, I think that's all the information I need at this point. Do you mind if I take maybe 2 to 3 minutes to just structure my thoughts?
Yeah.
Thank you. Okay. Thank you for the time. So I think maybe to start with, I think my current hypothesis would be acquiring Pasta House is a good opportunity for our client, and they should explore this acquisition opportunity. And in order to prove that, there are 3 areas that I want to look at. One is around the market. Second is around the economics of the deal itself, and the third one is around the general visibility of the deal. So within market, in order for me to believe that this is attractive, I think there are 3 areas that I would like to look at. I need to believe that the market is actually sizable for these pizza and pasta market, and it's actually still growing. Second is the market, there's still room for Yummy Pizza and Pasta House in particular to compete in the market. And lastly, in terms of the key trends, there's the key trends in terms of, for example, customer behavior is actually still supporting the market growth. So, for example, it's not like people in the markets that Yummy Pizza and Pasta House operates. It's not like they are reducing their consumption of pizza and pasta. And then in terms of the economics, I think, as you mentioned, I would like to look at the potential revenue addition from this deal. as well as the incremental costs. I think we can probably group this as basically what is the synergies to Yummy Pizza. You also mentioned earlier the CEO plans to increase the market share of Pasta House and also the number of stores. So maybe we can look at that, and as well as what is the investment cost to acquire to do this deal, right? And then lastly, within the feasibility, I think the way I look at it, I look at the internal factors and external factors. Within the internal factors, it could be something like the capabilities of the management to actually manage and scale this pasta house company, right? And do we have the right resources to execute this deal? And also the other strategic considerations. For example,
what are
is
the
the
examples
location.
of capabilities that you think important if Yummy Pizza wants to acquire this pasta house? Because you
Yeah,
mentioned about capabilities, right?
yeah. For example, whether Yummy Pizza has done some sort of similar acquisition in the past, so that whether the top management of Yummy Pizza has experience in doing this, and also the access of capital and the other resources that may be critical to as we acquire and grow this company. Yeah, and then I was mentioning about the other strategy consideration. It could be also the locations, right? Whether the locations are complementing to each other. Because I think Yummy Pizza operates in a lot of countries, but yeah, Pasta House operates in the U.S. So probably what the location map looks like in terms of both footprints in the U.S. Something like that.
Yep.
And then lastly, on the external, I think just want to make sure there's no external factors that is concern here. For example, in terms of regulatory and or legal perspective, is there a concern, or maybe is there a cultural fit, for example, between the two companies that may clash in the future if we proceed with this acquisition. So I think overall, those are the areas that I would like to look at in order for me to believe that this acquisition is a good potential opportunities.
Yeah.
Does that sound make sense to you, or?
Yeah, that sounds make sense though. But even when I look at this case, my first thought is whether there's a cannibalization or not. Like, I'm not sure whether people will eat pizza and pasta at the same time. What's your thoughts on that?
Yeah, no, I think that's a fair point. And definitely, if I imagine myself going to pizza restaurant, and then suddenly they sell also they're selling pasta, then maybe if I already buy pasta, I wouldn't buy the pizza. So right. So I think that's a fair point, and it's something that we could also look at. And if I relate back with the my original structure, maybe it's part of the synergies that I mentioned about. So that's one of the components that we should look at in terms of the impact to this deal.
Got it. Yeah. Yeah, I think I like the way you frame it when you mentioned about synergy. I think it's something that maybe we can start with. What do you think?
Mm-hmm. Sure.
Cool. Yeah, but maybe before I give you the information, what kind of information that you think will be useful to assess on potential synergies between these two companies?
Yeah. So I think in terms of synergy, since we are talking about the economics, there are revenues and cost components, right? So maybe we can start by examining their, the two companies' financials to see whether there are areas that we can optimize there, both in terms of the revenues and costs. So I'm wondering if you have that information at hand.
Yeah. Cool. So let me very quickly share my screen and then give you a bit of exhibit on what's the condition in each company, Yummy Pizza and Pasta House.
Sure.
Yeah. Can you see my screen now?
Yes, I can see your screen.
Cool.
Sure. Do you mind if I take a minute, probably just to go through this?
Yeah.
Thank you. Okay, I think maybe there are a few observations here, at least from the data that you shared. Let me start. Let me start from the left. I think in terms of the number of stores, seems like the Yummy Pizza has operations not just in the US, but it also has operations in Europe, Asia, and the rest of the world. Although not that big. So out of 500 stores that they have, 70% are in the US. The rest are in the other countries. But for pasta, basically, it's still all the 100 stores are in the US. So that's so in terms of if we acquire them, it will increase our footprint in the US. Maybe if I move first to the right-hand side on the financials, um, there are a few observations here related to the synergies potential that we can explore. So I think on the cost side, one is around the COGS. Seems like Pasta House is more efficient in procuring their COGS at 40% versus Yummy Pizza at 50%. So here we can look in terms of, for example, negotiating with the suppliers. Now, if we, let's say, acquire Pasta House, we probably buy in terms of higher volume. So we can see whether there's a probability to actually reduce the COGS for Yummy Pizza.
Do you think that the costs for pizza and pasta will be pretty much the same?
Well, not 100%, but I'm sure there are components that are overlapping, right? For example, if you think about the raw materials such as flour, I think that will be one example, and we can look at deeper in terms of what are the COGS that they have, and then we can take it from there.
Yeah.
And number two, I think is basically on around the rent and equipment there, because seems like Yummy Pizza is lower at 5% versus Pasta's at 10%. So maybe here we can explore an idea of, for example, co-location, right? Because depending on whether the tenants are the same and whether they're located in the same areas, I'm not sure whether there's overlapping landlord that they have. But in terms of location, we could consider the co-location as a potential way to reduce the cost as well. Third one, I think, lastly, is on the HQ part. HQ here, I assume, is headquarter, right? And maybe if we acquire Pasta House, in terms of HQ costs, could be because this, the way I see it, is more like it's like a fixed cost thing. So maybe you don't need, for example, manage two large headquarters. You can survive by having maybe one, and maybe can save some costs also there. So that's, I think, a few observations around the costs. Would probably worth to also explore around the revenue initiatives. I guess not much data yet here, but I think there are a few areas that we can definitely explore, right? Because if we look at the bottom, in terms of revenue per store, Yummy Pizza is around $550,000 per store, and Pasta House is around $350,000 per store. And Yummy Pizza is actually above industry average, while Pasta is below industry average, right? So here we can think about what is the commercial excellence initiatives, how we can sell more, and how we can implement the learnings to Pasta House in order to boost their revenue as well. I think at this point those are the few observations in terms of synergy potentials. Do you think that makes sense? Does it resonate with what you have in mind?
Yeah, I think that makes sense, right? Echoing what you just mentioned, I think we know for sure that Yummy Pizza is bigger than Pasta House. I think if I remember correctly from what the CEO mentioned last week, as I mentioned earlier, the CEO plans to have an aggressive plan on Pasta House. So just rephrasing a bit the question, in the next 5 years, the CEO thinks that he wants to double the market share of Pasta House. At the same time, number of stores, they want to grow it by 2.5 times.
Right.
But the CEO also have a ballpark number saying that, okay, now revenue per store is 0.35 or 350K. But if he thinks that if the revenue per store in the next 5 years, because of these two aggressive plans, becomes more than 500K, which is higher than industry average, it will be too aggressive. So we need to stress that. We need to stress test that number and then see whether that makes sense.
I see. Got it. Yeah. Do you mind maybe if I take 30 seconds just to think a bit more on that one?
Yeah.
Yeah, so I think to stress test that scenario, right, in terms of the sales per store for pasta, then I think we basically need to calculate what is the future revenue of that pasta house, right, to achieve this target. What is the required, and then we compare that with the 500,000 ballpark number that the CEO mentioned to us. And for me to do that, I think I need to take it step by step, right? One is I need to know what is the current market share of the pasta house. And then you mentioned the target is to double the market share. Then from there, we can calculate what is the future revenue. And then given that the number of store will also double by 2.5x, then we can calculate the future revenue per store. So that will be my approach. And I think in order for us to do that, uh, I'm not sure if you have information around the market itself for me to calculate the current market share that Pasta House has, because I think from this exhibit that you shared earlier, we know the revenue for Pasta House, right? For example, the revenue from stores is around $35 million. I'm not sure in terms of the market revenue. Do you have information around that?
How would you calculate the market revenue usually?
Well, in terms of market sizing, usually you can do it top down or you can do it bottom up, right? I think the simplest way probably to go top down first if we have the high level data. If not, maybe we can try to build ourselves bottom up. Top down, I think we can start, for example, from the population. Given the pasta houses in the US, so what's the population in the US? I think around 300 million. And then if we have, for example, the average consumption for pasta per capita, that will be enough. If we don't have that information, we can think of it and to build the bottom up estimation based on that.
Got it.
Maybe, yeah. So maybe.
Yeah. So I think we can just do it top down.
Sure.
So yeah, as you mentioned, population 200 million. I think that makes sense. Consumption per capita today is $10 for pasta, okay. And then because again, this is the plan to double the market share is planned in 5 years. Mm-hmm. We estimate that the consumption per capita will also go up to $20.
I see. Got it. So the current market you mentioned is $10 per capita with population of 300 million. So it means it's a 3 billion market, right? And then it also means, given that our revenue from stores for pasta is around 35 million, so roughly we currently have around 1% market share. And the plan is to double that, right? If I recall, you mentioned that. So the target market share will be 2%. And then this 2% I will multiply with the future market size. And you mentioned the consumption will also grow at $20 per capita.
Yeah.
Is it fair to assume the population will be constant, or you think we should assume population will also increase?
I think for simplicity, we can just assume that it's constant at 300 million.
Got it. So in that case, the future market size will be 6 billion, right? And then with 2% market share, basically the target revenue that we're looking for Pasta House is 6 billion multiplied by 2% is 120 million USD. And then I think now we get the future revenue for Pasta House. The last step that I need to do is to just divide these by the number of stores. Currently, we have 100 from your exhibit here. And then the plan is to increase the number of stores by 2.5x, right? So it will be 250 stores. So in terms of revenue per store is 120 million divided by 250 stores. So it's close to 0.5 million. It's close to 500,000 USD. But I think it's still slightly lower than the ballpark number that the CEO mentioned, right? So I think if I reflect back on this, seems like we are still within the ballpark range that the CEO had in mind in terms of target. The other thing to note is this $500,000 is actually, if we compare with the current revenue per store that Pasta House, the number you have in the screen, the 350,000 is actually 150,000 higher, right? Or around 40% higher, which seems like it's a challenging target, given that we are also doubling the number of stores that we have by 2.5x, right? So I would imagine the increase will not be linearly or exponentially, right? At some point, if you keep increasing your number of stores, it will potentially plateau. So given that, and at the same time, you want to increase this revenue per store, I think it is a challenging target, although it's not impossible. So given that, and then probably we need to also look at the synergies more deeper to identify more initiatives.
Yeah. Okay. So I think it's good that you mentioned about other synergies. Another idea that the team had is trying to cross-sell. So in the sense that, for example, selling pasta and pizza in Yummy Pizza, or selling Yummy Pizza in Pasta House.
Okay.
Yeah. What do you think about it? Like, how would you structure that into a way that we have a definitive answer? Okay, yes, that's a good idea, or no, not a good idea. Don't do that.
Got it. You mean in terms of the, let's say, got it, the cross-selling, in terms of the profit impact, is it?
Yeah, you can. Yeah.
Got it. Do you mind maybe if I take another minute or so to think about it?
Yeah.
Yeah, I think in terms of how we will evaluate that in terms of the profit impact to the group if we start selling pasta in our Yummy Pizza stores, maybe I'll look at a few things, right? One is in terms of the additional revenue that we can generate from doing that, and accordingly, what is the additional cost resulting from that initiative. And I think this also relates back to your point, the earlier point around cannibalization, right? Because if we start putting our pasta products in Yummy Pizza, then potentially people who used to come to Yummy Pizza to order pizza, they would buy pasta instead, and they will stop ordering pizza. So I think that's the last component that we need to take into account. In terms of the additional revenue, I think we can try to estimate it quite quickly, just doing a back of the envelope analysis. And then, for example, we can estimate what is the number of pasta that we estimate to sell, and then what is the price per pasta on average, and then in terms of the cost, I think we can definitely the COGS that we mentioned here. What is the COGS of the pasta that we sell? And then also the other potential fixed costs, right? For example, such as the logistics or the investments that will be required for us to be able to sell pasta in our Yummy Pizza stores. So I think that's broadly the way I would think about it. Do you want me to come up with a number and calculate the profit impact, or?
Yeah, I think let's start with the profit impact. I think operation at the end of the day, if it's really profitable, we can take a look and then look around it. But let's start with profit impact.
Sure. And maybe let me just simplify this and then calculate at a per store basis, and then we can just multiply it with the number of stores that we have, if that's okay.
Yeah, I think per store will be okay, assuming that it's pretty much the same sales and same behavior anyway between stores.
Sure. So maybe do we have already information around the revenue drivers that I mentioned? Do we have already estimate how many, let's say, pasta that we can sell if we do this initiative, or you want me to estimate for us?
Yeah, we are targeting to sell 50,000 pasta.
Okay, per store.
Price per store, exactly.
Okay.
So at a price of $2. So because this is low end pasta, so it's quite cheap. With a margin of 60%.
Okay.
Yeah.
So the COGS remains the same with this data that you shared before. So 40%, 60% margin.
Yeah.
Okay, so that 50,000 pizza per store per year multiplied by $2 per pizza, that will give us 100,000.
Yeah.
And then with 60% margin, it will give us 60,000 per store per year in terms of margin. Is there any other additional costs in terms of, for example, the fixed cost that I mentioned that we should take into account here? Do we have information on that?
I think as of now, let's exclude that from the analysis.
Okay.
Yeah.
Got it. Cool. So I think in terms of the additional revenue and cost, I think it's quite clear. We are at 60,000 now. And the last thing to consider here is just on the cannibalization, right? Do we already have some sort of assessment in terms of how big is this going to be in terms of the cannibalization, or you also want me to estimate this?
So I think to assume cannibalization rate at 10% is quite reasonable. So they will lose 10% of their revenue. We can say that it's a bit different from what's in here, but we can say that right now they are selling about 150,000 pizza at a cost of $3 each. Sorry, at a price of $3 each.
Okay.
With COGS the same with what I mentioned earlier, which is 50%.
Got it. So just to make sure I understand it correctly, out of these 150,000 pizza per store that we sell, we are estimating 10% of these we will lose. Is that right?
Yeah, because of selling pasta.
Got it. So in that case, it's 10% of these 150,000, right? Which is 15,000. If I multiply that with the $3, it will give us 45,000. And then you mentioned the margin is 50%, right?
Yeah.
Okay, so in terms of potential loss, it's around $22.5 thousand per store. And if we compare this with the potential profit that we get from selling pasta, the earlier we got 60,000. So 60,000 minus this 22.5 thousand, we have 37.5 thousand.
Yeah.
Right. So maybe if you don't mind, I'll run this up to 40,000 per store.
Okay. Yeah.
And then assuming we are selling these to, let's say, 500 stores of Yummy Pizza, or maybe as a start, maybe 350 stores that located in the US. But I think in terms of full potential, if we assume all 500 stores, we sell this this pasta, then it will give us 40,000 per store multiplied by 500, which is, give me a second, is 20 million US dollar, right? That sounds like a big number, especially if we compare with, if I'm looking at our current revenue in both, if we combine 275 plus 35, just from the stores only, it's around 310, right? 310, current profit margin is around 10%. So our current profit is actually around 30 million. And if you're able to do this, we'll get an additional 20 million, which is around 2/3 of the current profit.
Yeah.
And that's very, very sizable.
Got it. Okay. So I think last question from me, that imagine that you meet the CEO in the elevator in the client office, and then the CEO mentioned, "Hey, you're Andre from the consulting firm. Okay, so do you think that should I buy Pasta House or should I not buy Pasta House?"
Sure. So do you mind maybe if I take 30 seconds just to summarize where we are right now? Thank you. Okay. So I think the way I will summarize it, so far, I still believe that acquiring Pasta House is attractive opportunity for Yummy Pizza to explore. And this is because of few reasons that we've seen. One is we've seen that the market will grow, and in terms of the consumption per capita, it will also double in the next few years. So that's a good indication. Second reason is around the synergy. We've seen some initiatives, for example, selling Pasta House to Yummy Pizza stores. It will potentially gives us additional increase of 60% in terms of current profit. So that's seems to be very attractive. And on top of these, there are still other synergy initiatives that we could look deeper and quantify, although at this point we haven't been able to do it. But that's something that's the next steps that I would recommend for us to do. And other than that, probably in terms of next steps, I would also look into the feasibility on also the investment cost that I mentioned upfront, because I think we haven't had a chance to discuss on those so far. But to me, that will be my recommended next steps to evaluate this. But as of now, my emerging view is still an attractive opportunity for our client to look into.
Got it.
Thank you.
Cool. Good. So that's the end of the interview. Okay, I think let's do a short debrief, right? Which is there are a few things that I think worth to mention and worth to discuss.
Yeah.
So maybe I'll start today, but I mean, if you have anything, or if you think that there are common pitfalls from your past interviews, that you have seen, maybe just add on, right?
Sure. Yeah.
Yeah. So what I've seen first is on structuring the problem. So when you come up with the first structure on, okay, what's revenue, what's about the internal and external factor, I think I like the way you frame the problem. It's messy enough. It's something that, okay, you have a hypothesis, and then you have all the assertions in order to prove that hypothesis. And I think that's very important, because I remember that when I was preparing for this, sometimes I just don't have a clear hypothesis. And I think that's one of the common pitfalls that I've seen, right? People just come into interview, or people, sorry, come to the structure without clear hypothesis. They don't know what they're they don't have a view yet, right? So I think that's why I really like you come up with a hypothesis, and then there's a structure that is missing. Anything that you want to add on structuring the problem, Drake?
No, I think you covered that. You can keep going first.
Yeah. And second one, I think we did a bit of calculation. There were 2 calculation questions. So what I really like is this is something that is not easy for candidates, right? People got intimidated easily with math, and for a few reasons. First is doing the calculation itself. Second is just there is an awkward moment between, oh, you are doing the calculation and then you're presenting your view or your result. So I think one of the trick, which what you did is, okay, you take about only 1 minute and then come up with the structure on how you do the calculation. So it's almost like a checkpoint, and then you do the calculation afterwards. So the awkward moment, like the silence moment between the interviewer and the interviewee, was quite short. I didn't feel like there was an awkward moment that makes me, hey, what is the interview is doing now? So I think I like the way you structured. Okay, what's the structure first, or what is the big formula of doing the calculation, and then present it, and then come up with the calculation. Second, I think it's also related to the next point, which is business judgment. So I think whenever you come up with a number, you don't stop there. You always try to make sense. Oh, this number is 30% out of the current revenue, or this number is quite challenging for the company, and then you say why. You have the argument. Even whenever you are doing whenever I give you this exhibit, and then you come up with something, right? As simple as, oh, yummy pizza, yes, international exposure, Europe, Asia, rest of the world, but you come up, oh, US is 75% of total. So 70% of total. So those small calculations, I think it gives an impression, at least from the interviewer perspective, that, oh, you are comfortable with numbers, and then it shows your analytical skills.
Okay.
Yeah, so I think that's what I like. And because I also remember that when I was preparing for this, sometimes I just, okay, you ask me this question, I'll answer it, but that's it. The revenue per store should be less than 500K, and I stop there, but don't give a flavor to it, right?
Yeah. No, maybe if I may add, I think I agree with what you mentioned, Steph. I think in terms of calculation, I think laying out the structure is definitely important, not just because of the reason that you mentioned, but also it helps the interviewer to actually help you, right? So at any given point, if you are lost in terms of your calculation, at least I know what you're going to do, and I know what you are doing, and I will be able to bring you back on track. If you don't tell me what's the structure or what you plan to do, then I don't know what you're doing. I don't know how to help, right? So I think that's I think that's very helpful. And second, it's just, what do you call it? Being structured, right? Because being structured is not just about at the beginning where you frame the problem, but over the interview, throughout the case, as candidate, usually you should try to always be structured so that you don't lose track and you don't lose the bigger picture. And I guess it ties back to the point that you also mentioned, right? Whenever you're done with certain analysis, whenever you're done with certain calculation, it's important to link it back with the original problem that we are trying to solve to see how the whole answer fits together, right? Otherwise, you'll just do the calculation for the sake of doing it because the interviewer asks you to do it, and then you don't know how to piece that piece of puzzle back to the main puzzle. So I think that's a very important point.
Yeah, I think additionally also some of us is not super comfortable with math, so maybe out of 10 calculation that you did, and then maybe 8 of them is not correct. So I think there are 2 tricks that you did, right? The first one basically try to run up or run down the number to a number that is easily calculated. And second, basically, I think for me, right, the way I see it is whenever you lay out the structure to the interviewer, it's almost like a checkpoint that if, as you mentioned, if at the end you got the calculation wrong, at least you got half of the points. Like at least you know how to do the calculation. But if at the end it's a your calculation or the result is not correct or it's not as what it's supposed to be, then at least you know how to lead it out, so you don't get the 0 score on all the math.
Yeah. Anything else?
I think the last one that I want to add is also on how you drive the discussion, because sometimes we are quite passive. Sometimes the interviewee is quite passive and then not trying to drive the discussion proactively, asking the question, okay, is this what you mentioned? Clarification, sometimes interviewee also got intimidated by clarifications. They feel that, oh, if I ask clarifying questions, it means that I don't get it.
Yeah.
But actually, it's very important to make sure that you got it right. Otherwise
you dig your own hole.
Correct. Yeah. So I think it's good that you are proactively asking clarifying questions and then checking whether your understanding is correct, because it is very important as well. Otherwise, you're just lost, right?
Yeah. And lastly, would like to hear your suggestions, feedback. Feel free to drop us a note, comment in our Instagram, or just drop us an email at hello@adamentor.com, or just simply WhatsApp us. I think you can reach us there. And yeah, just stay tuned and for more updates. And to your request earlier about my notes, yes, I'll post that in the social media as well. Hope you find it helpful. And if you would like to us to cover other topic, please let us know as well. And that's it. I think that's all we have for today. Hope you enjoyed it, and I hope the session was helpful. Thanks a lot, Steph, for participating, for taking time. Do you have anything else to say?
Good luck on the preparation. It's not it's a marathon, so it's going to be a long journey, but I think at the end it will be paid off.
Cool. Okay, that's it then. Have a great Sunday, everyone. Thanks for tuning in.
Bye.
Bye-bye.